Today, we're going to pull back the curtain on the travel industry and break down the latest quarterly report from one of the absolute giants, Expedia Group. You know that feeling, right? You find a flight, you click book, and boom, it's all confirmed. It feels so simple. But behind that one little click, there's this massive, complex financial engine. And today, we're going to peek right under the hood. And we're not just looking at some summary or news article. Nope. We're going straight to the source, the official document the company files with regulators. This is what Expedia is really telling its investors. So, here's the big question on everyone's mind. Is that post-pandemic travel craze still fueling massive profits? Is the party still going strong for companies like Expedia? Well, let's see what the numbers have to say. All right, first things first. Let's get right to the good stuff, the headline numbers. How did Expedia actually do this quarter? Get ready for this. For just the third quarter of 2025, Expedia Group pulled in a staggering $4.4 billion in revenue. Just let that sink in. That's the total amount of money that came in the door in just 3 months. And okay, after they paid all the bills, all the costs of running this massive operation, what were they left with? A cool $959 million in net income. That's pure profit. And that is a very, very healthy number. Now, a big number is just a number without some context, right? And here's the key. That $4.4 billion represents a 9% increase compared to the exact same time last year. So this tells us the company isn't just profitable, it's still growing at a really solid pace. So where exactly does all that money come from? See, Expedia is so much more than just a single website. It's really a complex business with two major sides to it. This chart breaks it down perfectly. You can see the biggest slice of the pie, 65%, comes from what's called B2C, or business to consumer. That's you and me booking trips on sites like Expedia.com or Vrbo. But check out that second slice. A huge 32% comes from B2B, or business to business. So what the heck is B2B? Well, this is where Expedia is kind of like the wizard behind the curtain. They provide their travel inventory and their booking technology to other companies. We're talking airlines, corporate travel agencies, you name it. It's this powerful, mostly invisible engine that's driving a huge part of the travel world. So we've got these two main engines, B2C and B2B. But which one is really hitting the accelerator? Which one is driving the most growth? Well, the profitability data tells a really interesting story. Now, this table uses a fancy metric, but it's basically just a way to measure the company's core operating profit. And as you'd expect, B2C is the largest chunk at over $1.1 billion. But, and this is a big but, look at that growth column. While B2C grew a strong 14%, the B2B segment grew even faster at 19%. And that, right there, is the crucial point. While the consumer business we all know and use is the giant, the behind-the-scenes B2B segment is actually growing even faster. This suggests that the wider travel industry is relying more and more on Expedia's tech, which makes for a really powerful, diversified business. A strong quarter brings in a lot of cash. So let's take a look at what Expedia is doing with all that money, because honestly, it tells you a lot about how confident the leadership team is about the future. At the end of the quarter, the company was sitting on a massive pile of cash, $5.8 billion. That's a huge financial cushion. It gives them the flexibility to invest, to give money back to shareholders, or to just weather any kind of economic storm. And believe me, they are putting that cash to work. The report shows two key things. First, they're bringing back quarterly dividends. That's a direct cash payment to shareholders. Second, they've bought back $1.4 billion of their own stock. Both of these moves are classic signs of confidence. It's basically management saying, we believe our own stock is a fantastic investment. But of course, it's not all sunshine and record profits. No business operates without risk. The financial report also has to lay out the potential challenges that could be waiting down the road. The report outlines a few potential headwinds. You've got the big ones you'd expect, right? An economic slowdown that makes people travel less, or some kind of geopolitical issue. But then there are also these very specific operational risks, like tax authorities around the world taking a closer look at big global companies. And to make that a little less abstract, let's look at a real-world example they mention. Right now, tax authorities in Italy are digging into the company's practices on short-term rentals, looking at a period that spans 6 years. And this is not a small deal. The report states that Expedia has already set aside a reserve of $90 million for a potential settlement. This just goes to show you how these regulatory risks can have a very real, very tangible financial impact. So, what's the big picture here? Well, you have a company that's posting really impressive growth and profit, clearly riding a strong travel market. But at the same time, it's navigating some very real financial and regulatory risks that just come with being a massive global player. Which leaves us with this one last thought. The results look fantastic right now in this environment. But with all those risks we just talked about, from a shaky economy to tricky regulations, how resilient is this business model really if the travel boom starts to fade? That is the billion-dollar question for investors and for the whole industry.